Hey guys, so this is October 28th of 2023. It's Saturday, it's a weekend. The are closed, and we looked at our watch list. We broke our watch list down into three types of stocks: 3 star, which is the top rated, 2 star, and 1 star. And we picked the 3 stars and looked through them for the week. And we've picked all of the ones that moved up for this week, which has been a down week for the markets, but they moved up or they showed potential. And we are providing the analysis on these stocks. So I have 5 stocks to go through today. Bear with me, but we're starting with the first, which is Medifast. And so, Medifast, they make Optavia, their diet supplements and so forth. But we're going to look through Medifast and see how they're doing. Now, they've been at the 52-week low for a little while now, but we're going to look at them at the state of this weekend. And right now, Medifast is at $69.58 a share. Their earnings per share is $12.15. That's their profit divided by the number of outstanding shares. And if we look at Medifast, their profits are increasing almost every year. In 2018, they were at $4.62. 2019, $6.43. Now, when I say these small numbers, realize that's divided by the number of outstanding shares. And if we want to see the number of outstanding shares, I can go here to the bottom and we can see that's 10.89 million outstanding shares. So they went up from 462 in 2018 to 643 in 2019, 868 in 2020, 1389 in 2021, and then they dropped a little to 1273 in 2022. Now we're in 2023 and they're at 1215. But realize this may not be their final earnings per share for the year because we still have 2 months to go, November and December. So the earnings per share had been increasing every year till 2021. They dropped a little in 2022, but still pretty high at 1273. When they're currently at 1215, but we're not sure yet what they're going to be at by the end of this year, whether they'll still be at 1215 or whether they have moved up, whether they moved up enough to surpass 2022's number at 12.73. So we're yet to find that out. Now let's look at the prices a little bit. In 2018, they went from $53 to $217. 2019, 64 to 135. 2020, 45 to 188. 2021, they jumped up 173 to 306. And 2022, they came back down 100 to 205. Now, currently they're at $69.58. And we're going to see what Yahoo analysts project that they will move up to. Yahoo analysts project that they will move up to $81 in the next 12 months. That's not much of a jump, but let's analyze the PE. So their low PEs were 11, 10, 5.28, 12.48, and 7.87. The only year that their PE was lower than this year was in 2020, which, if you recall, those were the COVID lockdowns. And their PE moved up quite a bit here. It moved up from 11 to 47. But from here, it moved up from 10 to 21. That's a difference of 11. From here, from 5 to 21. Here, from 12 to 22. That's a difference of 10. And here, from 7 to 16. That's a difference of 9. So I'm going to be most conservative, and I'm going to say 9. Our current PE is 5.73. If I add 9 to that, that brings us to 14.73 times their earnings per share of 12.15. And that gives us 178.96. So from what I see here from the PE, it's saying this stock can move up to 178.96 in the next 12 months. So Yahoo's analysis says 81, I believe, and mine's based on the movement of the PE. I see it possibly moving up to 178 in these next 12 months. But let's look at the fundamentals for this company. So if we go down a little to the income statement, we're going to look at the revenue that they've made over the last 5 years, their total sales. It was $501 million in 2018, $713 million in 2019, $934 million in 2020. What is this? $1,526 million in 2021 and $1,598 million in 2022. So their sales have been increasing every year, and after paying off all their expenses, what were they left with in profit at the end of the year? Well, their net income is, in 2018, $55 million, 2019, $77 million, 2020, $102 million, 2021, $164 million, and in 2022 it dropped again, but not far, $143 million. Now let's look at the profit margin. We know what they made in terms of net income or their profit, but what percentage did that work out to of their total sales? In other words, after they had their total sales for these years and they was able to keep a little in profit, what percentage was that? In 2018, it was 11.14. 2019, it was 10.92. 2020, it was 11. 2021, it was 10.75. And 2022, it was 8.98. Now, if we move down a little bit, we see that their return on equity, the return on the shareholders' investment, was 51% in 2018, 74% in 2019, 65% in 2020, 81% in 2021, and 92% in 2022. And for me, those would be pretty great, pretty astounding returns on equity. Generally, when we get over 200% in terms of debt or debt to equity, the return on equity can be over exaggerated. It can come out a little high, or the figure could be a little distorted. But they are handling their debt pretty well. 55% in 2018, 85% in 2019, 75% in 2020, 96%, and increased a little in 2021, and 103% in 2022. But with that, it's still way under the our 200%. And speaking of debt, if we go down to our balance sheet, we know that on our balance sheet it shows us four figures. Two is the current assets, what the company owns, that's like under a year in terms of paying for, and what the company owes in terms of under a year for liabilities, and what the company owns long term or total, and what the company owes total. So first, let's look at the current liabilities. And we notice that for the current liabilities, sometimes for the current liabilities, especially for banks, you'll see where their current assets is smaller than their current liabilities. The current liabilities exceed the current assets. Not exactly what we like to see, but in some situations we can live with it. But this company, not only does their current assets exceed their current liabilities, but when you subtract their liabilities from their current liabilities from their current assets, they actually have more than the current liabilities. In 2018, the current liabilities were 60 million, and after you subtracted the liabilities from the assets, you still had 85 million in value. This year, it didn't exceed, but it was close. 74 million, 79 million. This year exceeded, and the last 2 years it didn't, but they were pretty close. And if we look at the total liabilities against the total assets, it more than exceeded in every year except for 2022, which means, let's say we went through another year like COVID lockdowns, where this company maybe is locked down and they're not able to do any business. This is telling us that they have enough money on their balance sheet to survive for about a year or more, to survive for more than a year easily, which doesn't sound like much, but many companies don't have that. They pay a dividend and they've bought back more shares of their own stock in the last 5 years, which is a very good thing. A company can actually make money in 3 ways. They can make money by doing what they do for a living, selling the product or service they provide. They can make money by borrowing it. or they could make money by just selling more shares of their stock every year. Well, selling more shares of the stock isn't necessarily healthy, and continually borrowing isn't healthy either. The way you want to see your company making money is by selling the products that they sell for a living. Well, this company is not making money by selling more shares of stock. As you can see, they are buying back more shares of stock every year, which is a healthy thing and actually makes the price go up. And then when we get to changing current debt, changing long term debt, there is none. They're not borrowing more money. Now let's go down to looking at free cash flow. With a company, with the balance sheet can sometimes be messed with a little bit. There's certain types of things like depreciation or things like that that could be tampered with. So the income statement may look healthy, but the company may not necessarily be in a great position. But what lets you know if they're doing okay, is what free cash flow they have. And this company, Medifast, has, well, actually they have 56 million in free cash flow in 2018, 74 million in free cash flow in 2019, 139 million in free cash flow in 2020, 60 million in free cash flow in 2021, and 177 million in free cash flow in 2022. But this company also pays a dividend. And when you pay a dividend, especially a nice dividend, like Medifast does, you want to make sure that that dividend is being paid from their free cash flow and they're not borrowing money just to pay you the dividend. Because if they're borrowing money every year just to pay you a dividend, that means eventually they may run out of enough money to do that and your dividend would stop. But if they have the free cash flow coming in every year to pay your dividend, then you can count on that dividend continuing. So let's look and see if Medifast has the money after paying that dividend. And if we come here to free cash flow after dividends, we see 32 million in 2018, 38 million in 2019, 86 million in 2020. Now in 2021, they didn't have much free cash flow. So we run into a problem. You see that minus 3 million? In other words, they was able to spend the cash flow on the dividend, but it wasn't enough, so they had to include 3 million from borrowed money to give you your dividend that year. But 2022, after paying the dividend to you, they had $106 million. So let's look at some particulars about this stock. Like we said, they have 10.89 million outstanding shares. The shares held by insiders is 2.14%, which sounds like a small number, but that's 2.14% of 10.89 million. So that's actually quite a bit. Most companies have under 1% of inside owners. Insiders are people who work for the company or are involved with the company in that capacity. And by institutions, large banks and other institutions, the ownership is 96.09%. Now, the last dividend that Medifast paid was $1.65. But the more important thing is what we see here with dividend yield. The dividend yield on this company was an astounding 9.49%. Now, many companies that you analyze will have a dividend yield. If they're doing 5%, you're lucky. Many are 3%, 2%, even 1%, but they are paying you 9%. That means of every share of stock that you buy from Medifast, you're getting an annual 9.49% return on your investment in them. And that's a great dividend. So the management, Daniel R. Chard is the executive chairman and CEO, and he was appointed in 2020. And if we look at the company from 2020, they seem to have been doing okay, like we said. They actually dropped a little from 21 to 22, but we can give time, see if things are continuing to go well. And Medifast is in the personal services industry, consumer cyclical sector. Okay, guys, see you in the next video. Okay, we've looked at the fundamentals for Medifast. Now we want to look at the technicals. And if we look at the technicals for Medifast, we see that this stock has been moving down. I would say this has been since June of 21. It's been moving down. We've seen a few green candles where it starts to peak up a little and then it continues down. We see all these red candles. And now we come to this last week and we see a small green candle. It's not much, but it's something to look at. We want to see if it continues to move up. Now, I see a few situations where Medifast started to move up. Here we see 1, 2, 3 weeks. 1 to 3 weeks. This was 1 week. Here we see 2 weeks it moved up. Here we see a few green candles, then 2 more weeks where it moved up. But we want to see a few consecutive weeks, and then we'll see if we get our chance to jump into Medifast and hold on to it. But at the same time, if we see that it starts moving up and we jump in, then it starts to move back again, we want to get out of it. We don't want to lose our money in this stock. So this is from the weekly perspective. Let's go down to 12 months and look at what it's been doing from an annual perspective. And we notice that this stock was moving up from year to year. We see it went back a little here, but it's been moving up from year to year until it got to 2022. It dropped significantly, And here we are in 2023, and it's dropping again. But there's some hope of making some money in it during the year if we watch our candles from the weekly perspective, jump in when we feel it's the opportunity, and if it starts to retrace on us and starts to go back, we get out of it and look for other opportunities.